Welcome to the FTA tutorial videos on how to complete your VAT return. You've just watched our Getting Started video. In this module, we'll explain how to complete box 1 of the VAT return, covering VAT on sales and all other outputs. In this section, you should include the net value of supplies of goods and services you have made, and the VAT due. This information should be identified by the emirate in which that supply was made. For businesses with establishments in the UAE, the supply should be reported in the emirates where the establishment most closely connected to the supply is located. For non-established businesses, the supply should be reported in the emirate where the supply was received by the customer. The total net value of the standard rated supplies should be reported in the amount column. Standard rated supplies are subject to VAT at 5%. This box should include the net value of the supply of goods and services subject to VAT at 5%, supplies of goods and services at a discounted rate, deposits received, sales through vending machines, supplies of commercial property, intercompany sales, supplies made to staff, the sale of business assets, deemed supplies, reimbursements of expenses from customers, the full value of goods sold under the profit margin scheme, less any VAT calculated on the margin, sales by non-resident persons who are registered for VAT purposes in the UAE where the importer is not responsible for the calculation and settlement of the tax, supplies of goods located within designated zones where the goods are consumed within the designated zone, reductions in value due to credit notes issued, or errors that you are allowed to correct for previous tax periods. This will apply where you have discovered an error where the payable tax is less than required by AED 10,000 or less, and you discovered the error in this tax period. If the tax value of the error you have discovered is more than 10,000, you should submit a voluntary disclosure in the tax period in which the error was found. But it should not include sales of goods located within designated zones which are not consumed within the designated zone, out-of-scope supplies, zero-rated supplies, or disbursements. The VAT amounts relating to the net value of sales and other outputs previously included within the amount column should be included within the VAT amount column. This is the VAT you have charged to your customers, also known as output tax on the supplies you have made. The adjustment column in this section of the VAT return is to record any adjustments made to the output tax due as a result of any claims for VAT bad debt relief or sales of commercial property where the buyer has already paid the output tax to the FTA. All amounts entered should be VAT amounts only and can only be negative amounts. Again, these should be reported for each emirate. If you are not claiming VAT bad debt relief or making a real estate adjustment, you should not include anything in the adjustment column. You've now completed box 1 of the VAT return. Watch the next video to learn how to complete box 2 to box 8 of the VAT return.